Let's chat about that with Digant Haria. Digant, hi, morning. Thanks for taking the time out. Are you as taken aback by this announcement on Kotak as most of us are?
Morning, Aisha. Until now, it seemed that our NBFCs were the only place where RBI was bent on ensuring compliances and processes. But with this Kotak Bank coming into picture, all the hello around these large private banks also starts collapsing. We saw that HDFC, there was some action on HDFC a year back. Now there's a big action on Kotak. Um, so, so I think, and when you just analyze the whole, why is RBI doing all this? I think the genesis of all this is that in the pandemic, we saw a huge digital growth. We saw this video KYC and KYC being done purely digitally for the first time, and growth was very strong. So I think RBI is unhappy with a lot of those things because the KYCs were not proper, and there were some deficiencies. So I don't think Kotak will be the last where this action will come. This action can come on, more banks, more NBFCs in the coming months. I don't think this is the end of the regulator being not so gentle on them.
And currently, they have about 3.9% exposure to credit cards, right? And that's obviously going to come down. Lower card business could also then impact your ROAs, right? What is it that you've calculated?
See, on the business front, Kotak used to, in the last 12 months, they have always said that we are pivoting towards retail and unsecured lending as our high growth engine. And in this retail and unsecured lending, there were three components. One is the microfinance, second is personal loans, third is credit cards. And with this ban in credit cards and the ban in this whole digital onboarding of customers, I think your funnel, the number of customers on whom you will do analytics, on whom you will do cross sell, everything actually starts coming down in the next few quarters. And the impact is not just on say 3-4% of the portfolio. I think the impact is it's slightly deeper, and I don't have a number to it right now because it's just that 15% of the total portfolio is all this unsecured high yield lending, and maybe the growth rates here were higher than 20%. They'll come down to something like 12-15%. But that also shaves off some price to earnings multiple or price to book multiple, right? We give multiples for growth. Growth is probably going to come down. And yeah, the halo around Kotak, being a very, very compliant bank and all of these things also come down. So all in all, I think it's a big negative for the stock and for the bank in general.
Stay with us because that's a very important point that look, it appeared that okay, there was some very powerful move by the regulator against NBFCs. But folks, please remember, this is Kotak we are talking about. It was HDFC Bank a couple of months ago, couple of quarters ago. Wherever there have been non-compliance, wherever the framework and guidelines have not been followed, Reserve Bank of India has not differentiated between a national, between a national brand or a local NBFC. The fact of the matter here is that if there is a non-compliance, well, you will have to either comply it, or you'll have to, or you will be, there would be a punitive punishment, or there would be a very serious crackdown, like what has happened in case of IFL, or for that matter, what has now happening in the case of Kotak Mahindra Bank. So Digant, Kotak Mahindra Bank is going through two problems. One, the change of CEO and that migration, which markets will take some time before they know that how the new CEO would adapt to the working of the bank and the culture. And second is the reputation damage more than the EPS impact. If you put both these factors put together, which cannot be collaborated in an Excel sheet, it really is the impact of judgment and sentiment. How do you see the stock will move? It's been a ranked outperformer for last couple of years. Do you think this rank outperformance is here to stay?
Yeah. So Nikunj, you're right that see this entire non-compliance and all, the genesis is that 2020-21 RBI just did virtual audits because there was pandemic and nobody could really go to the head offices or the branches and do the systems audit. But 2022, when the audit started happening, RBI found serious deficiencies across everyone. Be it the hallowed banks, be it the NBFCs. And you'll be surprised, Nikunj, even PSUs are being scolded by RBI. Though the action is not very severe on PSUs, but they are also getting scolded by RBI. So nobody, I think, is really above this whole system audit of RBI. And for someone like Kotak, once we've seen 3 years of underperformance in terms of stock price. I think we easily have 12 to 18 months more of underperformance. Maybe stock is cheap 2 times on FY26 or March 26 book. The stock is cheap. One should not expect say 20-25% kind of downsides, but I think the stock will move in that range of 1600 to 1800, or the same range which it has been hovering around in the last 2 years. I think the same thing continues. So what you see is a time-wise derating and the halo or the higher price to book multiple coming off. And yeah, the shareholders grind continues. And the larger picture which I read, Nikunj, is that PSU banks, the trade PSU banks doing better than private banks, that trade will continue even stronger in the coming quarters.
Absolutely, and we've already seen rank underperformance within the private banking, lot, especially these haloed ones. But Digant, thanks as always for taking the time out. I mean,
If you like this video, then like, share and subscribe to ET Now.